Hello, friends. Welcome to the Weekend Investing Stock Market Weekly Review. And what a week it has been for the week ended 4th of April. Complete bloodbath, not just in India, but more so in the global marketplace. US stocks falling like nine pins. Of course, there's a tariff war that is on. You probably already know about that. China retaliating with counter tariffs and hurting basically the whole fabric of global trade that is going on. So, just to give this context, the entire imports of US are 3.5 trillion or somewhere near that figure. And on an average, if US puts 20% tariff, that will be about 650 to 700 billion dollars, assuming that the demand will not collapse basis the increase of price. So for a matter which is only $700 billion, I'm saying only because the larger context is bigger, $700 billion of tariff matter, we have destroyed $11 trillion in market cap in the US itself. And if we club it with the rest of the world, it's probably like perhaps $15 trillion. So $15 trillion of damage has happened in a fight which is a matter of less than 1 trillion. And that 1 trillion also is not as if it is 0 versus 1 trillion. It is somewhere around that 700 billion mark that the final negotiation could have happened had this been done properly. So this one person who is powerful enough to rule over 8 billion people is having his ego moment, and is causing extensive damage to the rest of the world. The damage is not just in market cap, stock prices, because that, of course, if at all, will come back. But the damage is of sovereign nations not trusting each other now. The damage is of investors not believing in the stock market again. Those kind of collateral damages takes years and years and decades to build back that confidence. So that, I think, is the bigger damage. Uh, we should not be expecting any kind of reversion to where we were immediately. Even if they back off, both sides or the rest of the world backs off, it will take time to mend this. So I doubt if there will be very quick fixes for where we are. But hope against hope. Uh, let's just hope that we don't get too much more damaged going forward. Although for Monday, the futures are quite negative. From the research desk this week, we had these fantastic stories. Please go to the Weekend Investing app or our blog, or use our newsletter to see and read all these fantastic stories. Disclaimer: please read fully. The regulator wants you to understand fully what you are seeing, what you're understanding from these videos, and in case there is any discrepancy, you must close this video right now. Do subscribe to the channel. Please give us some love for doing this work. The team gets motivated. So Nifty down 2.6% this week. I would say this is disappointing for sure, because the build-up that had happened in previous 2 weeks was looking like a reasonable chance to break out of this downtrend, but that has been smashed. Of course, the environment around us has got smashed. We are now once again down below 20 DMA as well, and Monday likely is that we will go further down. So that's where we are on the Nifty this week. On the Nifty weekly candle, you can see this last week where we had a doji candle uh, looked like indecisiveness, but now that we have broken down, it certainly is a turning point, and we will need to find another base somewhere. Uh, Whether it is going to be 22,000, higher than that, lower than that, I don't know, but it does look like we are going down. S&P 500 is down 9% this week. This is one of the largest ever falls in S&P 500. I think the largest one in the last few decades is 10.6%, if I'm not mistaken. So this is completely decimating the US markets. And what a self goal the US president has done. Of course, he says that this is all for long term benefit of the US, but in the short term, if it kills everybody, who is there to witness the long term growth? So I think short sighted, knee jerk, and badly designed programs by one person who's powerful enough to shake the world. uh, we've set up this system for ourselves, in terms of giving too much power to one country, and of course them being the consumer of the world. uh, every other country is in some ways dependent on them. Gradually but surely now the dependence will start to go down. People will stop having over dependence on the US market. And I think in the next 5 years a lot of changes will happen, where businesses will restructure and remanage how the global risk has to be remanaged. Gold also smashed down 1.56% this week, uh, from nearly 92,000 to 88,500. Damage, yes. Uh, Beaten down, no, not yet at least. I think next week onwards, it is likely that gold will start moving up even faster. That is just maybe my biased view. Because now what will happen is that no country will want to keep US dollars or US treasuries in reserves, at least not additionally. So who will US government issue debt to? Because without issuing their debt to somebody else, their economy doesn't survive. So it's a very, very major macro global problem that has occurred now. They were enjoying others' confidence on their treasury while getting cheaper goods and services. Now they want their pound of flesh in goods and services as well, and hence people will gladly do that, but they will not keep their treasuries in reserve. So if India, let's say, some exporter or Indian government is offering some goods or services, the money that comes back will not go back to the US as investment, not neither in their bonds nor in their stock market, but it will go elsewhere. It will go and buy something else, perhaps gold. So that is the kind of seismic shift this event is going to cause, in my view. Dollar index is falling. Some recovery in the last session, but still down 1.08%. This is the intended consequence by the US president that dollar index should go down, dollar should be weakened. But you can't have it both ways. You can't be the most sought after country in the world yet have the weakest currency if you want. You can't have it both ways. So one thing will have to go. Either the dollar index has to fall, uh, or basically you have to give up on the supremacy or the exclusivity that US enjoys. Benchmark indices all down between 2 to 2.5% across the board. Not major difference between any of these different benchmarks. So basically, it is an external force that got applied. IT stocks is getting smashed down pretty much in line with US markets. US markets down 9%, IT stocks down 9%. Metals also down 7.5%. There is fear that China is going to flood metals into India market and other South Asian markets now. Um, Apart from that, the notable sort of exceptions here were FMCG, that is not bothered, tourism, okay, consumption stories, media, and PSU banks, and banking in general, basically. So these are sectors that did not get bothered at all this week, which is very good actually. Also, to contextualize, um, Indian export is about like 3% of GDP. So heavens are not going to fall if there is some tariff on our exports. That, I think, context is important when we think about those numbers. Financial services, tourism, defense, banking in general, and private banks, capital market. These are some of the top sectoral momentum ranks. We see a very rapid improvement in media. We've seen rapid improvement in tourism stocks, rapid improvement in FMCG relatively. This is all relative scores, consumption stories, and some very rapid deterioration, let's say, in energy stocks and in also infrastructure stocks. Some insights from there. In the weekly advanced decline statistics, you have Nifty 50 having 78% stocks decline this week. In fact, it is virtually similar across the board, almost 70-30 in terms of advances and declines. So virtually the same. So the market fell very uniformly this week because the entire catalyst was external. That's the kind of message I would read out of this. The percentage of stocks outperforming benchmarks in the Nifty 50 this week were 52% stocks. Rest also were somewhere near. But over the last 1 year, for instance, Nifty stocks have 36% of Nifty stocks have outperformed Nifty 50, whereas only 17% stocks in small cap 250 have outperformed small cap 250. In Nifty Next 50, only 24% stocks have outperformed its benchmark index, and hence, our constant theme that you have to choose strength within a particular index because you have to be in those stocks that are outperforming the underlying index to really get that alpha. In a market cap segment wise drop from 52-week high, you can see that in Nifty, most of the drop is between 10 to 30%. In Nifty Next 50, significant drop is between 20 to 50%. Um, and in small caps, it is largely, I would say, 20% to 50%, even more actually. And very few stocks are left which are less than 20% damage from the top. In Nifty Next 50, you had 10% to 40% as the major chunk. So as you come down the market cap, you are seeing that more damage is there and higher falls are there. And as you go up in the Nifty, you can find that there are 22% stocks, uh, basically 11 stocks in Nifty that have fallen less than 10% from their peaks. So this combination of about 38% stocks right here is the place to hide right now within the Nifty space going forward. Is the trend improving or declining? So certainly declining. If you look at the 200 DMA, which is the blue line, it has taken a dip down. It was making a flag upwards, but now it has dipped down a bit. So only 18% of stocks in the CNX 500 are now above 200 DMA, which is very, very low. And 42% stocks are now above 50-day moving average, which is okay, but not very good. So both the 200-day moving average and 50-day moving average are uh, on the weaker side. In the benchmark indices, you can see that only 26% Nifty stocks are above uh, the 200 DMA, and in small caps, only 15%. So, very, very poor statistics here as well in terms of percentage of stocks above the 200 DMA. In the sectors, you can see again financial services, private banks, services, these are the few pockets where some stocks 40-50% stocks are above 200 DMA, and these pockets IT, real estate, energy, public sector enterprise, and oil and gas, they have no stock above 200 DMA. So I, actually speaking from a trend following perspective, you should not even be looking at those sectors right now. Only try to find setups in stocks where you have at least a 200-day moving average or a 50-day moving average crossing over the 200-day moving average, where you can see financial services has 85%, 80%, commodities now going down 73% above the 200, above the 50-day moving average right there. Strength and weakness within CNX 500. So golden cross stocks that have 50-day moving average more than 200-day moving average, which is a very classical sort of thumb rule for whether a stock is doing well. Golden cross is only 18% of 500 stocks. 88 stocks are there. The death cross, which is the absolute reverse, is 82% stocks. 412 stocks are completely in death cross. And if we see brute strength, so absolute strength, where price is greater than 25-day moving average, greater than 50-day moving average, greater than 200-day moving average, there you have only 30 stocks which really satisfy that condition. And on the flip side, you have 149 stocks that are in absolute weakness. So these stocks are where you don't even want to touch them with a barge pole in a trend following manner. In a FII DII stats, FIIs have been on a selling spree again. Last 5 sessions, we've had 4-5 thousand crores, 1,500, 2,800, 3,400 crores of selling. The new change that has happened is that DII is also sold on the last day that we had. So the last 2 sessions, there was either a very small buy and a very large sell. So this counter support that we were having in the market is also dwindling as of now. Let's see how the next week pans out for that going forward. In the FII cumulative activity last 1 month, the purchases by DII, net purchases by domestic institution is still very large, 55,000 crores versus 23,000 crores taken out by FIIs. So from that point of view, this equation still is working very well in favor of the market. And that's all I have in today's the weekly review report. I hope you enjoyed the content, and do let us know if you would like us to make some changes in this content, what you liked, what you did not like. Your feedback is important to us. Please subscribe to the channel. Please like and share these videos, and I'll see you in the next one. Thank you. Have a good week. Bye.